The JSE All-Share Index dipped below the 70,100 level in early trade and remains under pressure as investors weighed a batch of mixed corporate earnings reports from major global companies in the context of heightened geopolitical risks. For a look at the latest market moves, we're now joined by Viv Govender, portfolio manager at Rand Swiss. Viv, thank you very much for your time this afternoon. So the Rand and local trade remains sluggish. What's driving sentiment?
A couple of things we are seeing. Some positivity came through earlier with there was some news out of China that the stimulus package that they are looking for is coming out. Though I do think the market's a bit concerned about some of the estimates for next year. I don't think really they're going to be doing 4 or 5% next year. In reality, they may publish those numbers, but it's unlikely considering the fact that their property sector, which is a third of their economy, is under such pressure. The other news I think out there in the market at the moment is what's happening in the US tech sector. We had Alphabet and we had the Microsoft results. Alphabet seems to be doing a little worse at the moment, down a couple percent after market trading, and Microsoft is the reverse, doing a bit better, up a few percent in the aftermarket, trading at the moment.
Okay, Live Healthcare has published a trading statement for the 12-month period ended 30 September 2023. Help us make sense of the numbers.
Yeah, look, the share price at the moment is down slightly. They are saying they're looking at, revenue from continuing operations up 7 to 30%. They are seeing complementary services up, almost 10%, 9.5. And they are mentioning a couple of, good facts here, but the market really isn't liking it at the moment. Look at this company over the last year or so, it's basically negative, down about 2% over the year.
Let's take a look at Sibanye-Stillwater. They plan to enter into retrenchment consultations regarding the possible restructuring of 4 shafts at its SAPGM operations. What do we know about the latest developments?
Yeah, look, if you look at Sibanye as well, over the last year, this company is down 45%, 44%. The platinum price has been under huge amounts of pressure, and it kind of makes sense. If you look at the global trend, platinum is going the way of cigarettes effectively. Everyone in the world is looking to get to electric vehicles. Electric vehicles don't need platinum in the same way internal combustion engine vehicles do. And that's what platinum is used for. The biggest use of platinum in the world is for, platinum group metals as a whole, is for, internal combustion engines cleaning up the exhaust to make it cleaner, catalytic converters. And if you are looking at the world moving away from internal combustion engines towards electric vehicles, the demand goes down. And the second thing is that recycling is pretty strong in that sector. We increase the efficiency and recycling. The demand for new platinum into that particular market is dropping over time.
Okay, let's take a look at human rights lawyers. They've filed applications for certification of a class action against Anglo-American Group and other mining companies. What are the mining groups being accused of exactly?
I believe this is the lung issue, the lung disease issue. I know that Anglo's and I think Tagela as well was also looked at in terms of issues around lung disease from workers. Obviously, you can imagine working in a coal mine. Literally, it's used as a term almost of unbearable labor and the dust and the environment and so on. Obviously, the work health is going to suffer because of it. And nowadays, with better technology, with better understanding of how these things affect the body and so on, it kind of makes sense that these workers are looking for the employer to basically recompense them for the damage that they suffered while working for them. And so I think this is what's being looked at right now.
Something that we were taking a look at with the business desk here on the channel, jesting with Amanda Masondo on the business desk on the resignation of Kuben Naidu of the Reserve Bank, and just wondering what essentially that will mean, right? Especially when we come to interest rates. Are we likely to see that since there's somebody missing from the Reserve Bank, we're not likely to see a hike anytime soon, or no chance?
Look, I think he was one of the more dovish people out there in the Reserve Bank. Look, we will probably hike if the U.S. hikes, and the U.S. basically is kind of like on the border there. A few weeks ago, a few weeks ago, they were more favoring towards hiking. But the market has kind of calmed down since then. That being said, we're looking at U.S. bond yields at almost 5% at the moment. What that means basically is imagine you have U.S. bond yields at 5%. That means you can go out and borrow from the world's, lend money to the world's strongest economy, largest military, most stable market out there, and get 5% in US dollars. Everyone else in the world has to basically price at a better level than that effectively, because almost everyone else in the world has a higher risk profile than the US. especially in places like South Africa. So if they do decide to raise, unfortunately, we'll have to raise as well. And he, has a reputation of being one of the more dovish people in the thing. So he was one of the guys that was out there, less, likely to call for a raise. So make of that what you will.
This time next week on the 1st of November, so today is what, Wednesday, and next week, Wednesday, the 1st of November, the finance minister is also going to be having all eyes on him. These talks of austerity, just how much wiggle room does he have as we go to the delivery of that budget?
Look, it's the worst time for him because, we have a global uncertainty. We do have, really bad fiscal situation at the moment. And next year's election. Normally, unfortunately, I'm going to expect, weakness for the finance minister. I'm going to expect him to basically not look for austerity because, ahead of an election, trying to be austere is one easy way to lose voters. The easiest way to lose voters is to take away what they want, what they need, ahead of an election. They're going to get upset with you and they're going to make an impact on that in the voting booth. So yeah, I do think the situation is pretty bad. I do think if it wasn't for the election next year, if he had, the perfect, ability to do what he needed to do to make the economy better, he'd probably go for austerity. But I don't think he'll be able to do it ahead of an election next year.
Why not?
Like I said, the ANC doesn't have a 70-80%, vote share. It has, by some estimates, 50, some estimates slightly below 50 vote share. If you look at what austerity means cutting workers' wages or cutting, entitlements to people, welfare, basically. You try to do either of those things ahead of the election. Voters will not be happy, and workers will definitely not be happy with you. And those things, like I said, sure ways to damage yourself ahead of an election. And like I said, the ANC doesn't have the room to play around with, 10, 20%. Like they did a few years ago. It's basically raise the edge whether they can even get 50% this time around.
Viv Govender, thank you very much for your time this afternoon. Portfolio Manager at Rand Swiss.